looking at Transocean. At Howard, I was a member of the investment group, Howard University Investment Group, in which I actually pitched this stock, Transocean, for investment in 2021, back when the stock ticker was still trading at around $3.50. And, given everything going on in the world, I'd like to double down. Transocean is one of the world's largest offshore drilling contractors, specializing in ultra deep water and harsh environment drilling services. Their revenue drivers are basically the day rate that they contract for servicing the rig, as well as the contract duration. Here's also just a brief little overview about actually how oil is extracted in these rigs.
Ancient sedimentary layers millions of years old have trapped vast reserves of oil and gas, the energy source that has shaped modern civilization. Yet most of these deposits do not lie directly beneath our feet. They are hidden thousands of meters below the ocean floor. To reach them, humanity had to construct colossal machines, offshore drilling rigs.
It's called Drill, Baby, Drill.
Building an oil city in the middle of the ocean begins on land. Giant steel frames, weighing tens of thousands of tons, are fabricated in shipyards and hauled out to sea by specialized transport vessels. Once at the designated site, fixed platforms are lowered, their steel legs driven deep into the seabed and secured with concrete, sturdy enough to stand in waters 200 to 400 feet deep. Together, the fixed rigs, semi-submersibles, subsea wellheads, deep pipelines, and massive FPSOs form a chain that stretches from the Earth's depths to the ocean's surface. It is the journey that transforms energy, locked away for millions of years, into the lifeblood of the modern world.
In Transocean's 10K, there are a lot of things to cover here. First, at an operational level, they are extremely elite and leaders in this industry. Their contract drilling revenue jumped 13% to 3.5 billion US dollars. That shows that there's a market demand. That shows that the oil industry is not going anywhere. Companies are still going to need to extract oil for the foreseeable future and then thereafter as well. And the average day rate for each of these contracts is $456,700 for one day.
Drill, baby, drill.
So despite nearly $4 billion in revenue, totaling a net loss of $2.915 billion on the year. So almost $4 billion made and $3 billion lost. You see that the losses actually come from a loss on impairment of assets, which totaled 3.49. This is a paper loss, but it does not cost the company money. Looking at their cash flows, we see that they're getting more money from operating and they are spending less. And this is a good sign of operational health. Another key metric to look at, and probably one of the most important metrics to look at, is the revenue efficiency, which sits at a whopping 96.5%. And this is direct representation of the management's ability to convert contracts into revenue. Cash-wise, they're healthy. The biggest thing here clearly is with the debt. Here's how they restructured. They gave out ownership in exchange for money, and they used that money to pay off loans or debt that was going to be due in 2027, and they did this in order to prolong the deadline for the due date deadline, using a credit card to pay off another credit card. Okay. So more recently, Transocean made a pretty strategic move in acquiring Valaris Limited to create a totally bigger and better fleet, consolidate their market share.
Drill, baby, drill.
Valaris, let's look into Valaris.
Valaris has the largest fleet. Valaris's name may not be that familiar to a lot of folks here. It was actually a combination of two companies called Ensco and Rowan a few years ago. But they are two of the biggest offshore drillers. Offshore drilling is in a little bit of a recovery mode, really kind of has been. Most of the drillers went bankrupt actually during the 2020-21 downturn. Transocean was really one of the only companies that did not go bankrupt. Valaris did. And so Transocean's kind of been saddled with all this debt as a result of not having their balance sheet wiped during a bankruptcy. And so that's been a limiting factor on their growth for quite some time. And this deal, which is an all-stock deal, will accelerate their deleveraging process and remove some of that burden from them and better enable them to capitalize on an upturn in offshore drilling. And the second other thing that's important to note here is that it brings a jackup fleet. The jackups are basically shallow water rigs, okay, as opposed to the deep water drill ships or floaters. And Transocean had exclusively been a floater fleet. Jackups are more to the seabed. The seabed's lower in shallow water, and Valaris is one of the biggest players there. So this deal will give Transocean the ability to participate in that recovery.
I'm very bullish long term. I would bet on RIG to acquire some contracts to fix its backlog, to continue repaying down the debt. I'm very bullish. That 96.5% really stands out on revenue efficiency. They're gonna have over 70 ships now. It's over double what they had. Is it 70? The prices of oil are skyrocketing.
Drill, baby, drill.
We haven't become, as a people, efficient enough for us to detach from fossil fuels. I'm not a financial analyst. I am not a licensed analyst, licensed stockbroker, none of that. In my opinion, we have a company that has gone through some hard times, had to acquire debt, and is restructuring itself to, or has actually restructured itself to be very well positioned to have a successful future. I believe in Transocean.